What is going on, cryptocurrency family, cryptocurrency nation? This is Justin Blount here in 2022 to give a technical analysis on this latest Bitcoin crash, where we're at right now in the market, and where prices may be heading. I know there's a lot of fear in the market right now. A lot of people are worried. Even myself, I'm surprised, to an extent that we've had such a grotesque crash like this. But this is crypto. We should always expect a 50% crash at some point. Hope everybody has had a great 2022 so far. But I know if you're in crypto, you're just probably looking at your portfolio right now like I am and just like, what in the world's going on? This is on behalf of the Crypto Tutors platform. So if you want free tutoring sessions, we do one every month. Just sign up and subscribe in the links below. So Bitcoin, what is going on? Let's just jump into the charts right now. So there's a couple things that I want to point out on where we're at and where we're going with this crash and where support may be at, because we've been pretty much breaking every critical support zone. Every zone in Bitcoin's a critical support zone. We've been breaking everything from ever since we topped out right here at 69K. You can already see that it's quite obvious we've been dumping pretty hard. So I want to discuss where we're at in a relationship with our golden cross and death cross. And for people that may not know, this relationship with the moving averages could be a good indicator on how much further we could still sink. This is something that we have discussed on October 7th at the Crypto Tutors conference, the first diversity cryptocurrency conference ever. We've discussed this, that we get a relationship known as death crosses and golden crosses. So death cross, as you can see here, and I'm just going to come up and highlight that right there. We just produced that death cross right around January 14th, 15th. Now this is a relationship between the 50-day moving average and the 200-day moving average. So our 50-day moving average is right here in our blue. Our 200-day moving average is right here in our yellow. And you can see here, every time that we our blue line comes right under the yellow line, that signals that we may have further pain and further downtrend to come. Now the interesting thing about these is that when this happens, whenever the 50-day moving average goes under the 200-day, we pretty much have already had a substantial crash. Where have we seen this last time? Well, we've seen this right here around June 20th during the summer months. Our 50-day moving average comes below our 200-day moving average, forming a death cross. And as you can see from that level right there, even though we came down about, we've came down about 36% on prices when we death crossed, when we formed that. So we already dropped from Bitcoin 36%. And from those summer months, we still continue to drop all the way down till we hit $28,000, $29,000. So that was a 54% decrease. So what we're saying is that we've produced our death cross, but even from the summer months, you could still see it still was about another month before we started to get a reversal. And even from there, it took about, let's see here, took about 80, here we go, here's our golden cross. It took about 86 days from the time we formed our death cross back here, June 21st, June 20th, to when we got out of that death cross and produced our golden cross, which is when the 50-day moving average comes above the 200-day, which indicates that there could be good positive price action to come. So from there, where are we at now? So from that last golden cross we produced on September 20th, it took us about another, come on, let's try it. There we go. Took us 123 days before we formed our next death cross. So you can see here these relationships were on the we formed golden cross and death crosses. This at least with this past cycle is coming every couple months right now. So we just produced our death cross that took about another 126 days from our last golden cross here in September. Now, judging from the past, we can expect that we could still be in this dumpy price action for a little bit. You know, we could still be in this for another month or two, and we're going to get to support levels right now. We're going to draw our fibs. So what we really want to get out of this golden cross and death cross is that we have been crashing. We continue to crash, and you know, we still could have weeks, if not months, of not so positive price action for Bitcoin and the overall, possibly the overall, well, the overall market cap in a whole. Some projects are going to be outliers that are going to do the opposite. But largely, if Bitcoin is not happy, most of crypto is not happy, and there are a lot of external forces that are coming into play when we're having this negative price action. Is not just in Bitcoin either. It's pretty much in all asset markets. Even the stock market is experiencing dumpiness right now. So global markets are pretty much in a slump as we speak. So let's get on to our fib levels here for Bitcoin. So we're going to take away these moving averages right here, or these golden crosses and death crosses right here, and we're gonna take out our fib extensions right now to see where we're at, because like we've mentioned earlier, we've already been crashing pretty hard in price, and you know, even everybody wants to know, where are we gonna be at in price? Could we crash any further? And you know, the trend, I know it sounds cliche, but the trend is your friend until the bend at the end, and that holds very true even for this trend right here. And it's quite obvious, but I'm still going to draw out the lines that we are going down. So nobody's surprised about that right now. But even still, we want to just highlight, you know, just give a visual on the trend right now, as of right now. So we even broken through that, my goodness. It's not going to be too perfect. There we go. Kind of like a wedge, if descending wedge. It would be that sort of pattern in a sense. But so let's get into this story right now and where we're going to be at on price. All-time high 69,000. We've already came down a nice, so far 48% in the past 77 days. Now you could see here that we've broken every fib level when we took our top of our summer months here. Spring months came to the bottom with our fibs. We've broken through the 0.786, 618, and the line goes down to 5, 0.382, and now we were trying to hold this 0.236 here at $37,000, and we are starting to get daily candle closures below that, which is not a good sign. It's a continuation of this downtrend, but we were really looking for 37,000 to hold, but it is still holding a very, very important level here, at least in the mid 30,000s. I'd say, judging by our visible range index here on the far right, you see these levels right here. We have a big amount of volume and action coming into play at around $32,000 to $35,000 is where we're looking to hold for Bitcoin. But as we said, the trend is your friend till we bend at the end, and as long as this trend, as long as these red lines, as long as Bitcoin is staying within those parameters, the trend is going to continue to sink. So we've already broken a key level, well, at least at 37,000. We were hoping to hold the high 39,000 or 30K level, but now we're at the 50K. I mean, I'm sorry, not the 50K, the mid $30,000 levels. 35,000 is where we're at. And if we don't hold these, we could revisit back here to $29,000. Don't want to sound overly bearish, but this is just what the trend is saying. Right now, we continue to dump, and yes, if we want to hold, any level that we dump or we crash to, we ideally want to hold that level until we can't anymore. The same thing is going to go for this $35,000 range. We want to hold this level at least because there is a good amount of, at least volume or at least price action at these levels. But as you can see here, it seems like we're heading straight for 30K, upper 29Ks. It seems like we're going to retest these levels down here where we started, where we've been touching these very low-key levels, and we could see that for Bitcoin here. Really revisiting some of these lower $30,000 levels again. At least that's what our trend is indicating. If we have a continuation, which we've been in for quite some time right now, at least 2 months. 2 months is a long time in crypto. It can almost feel like it's 2 years because of the volatility. Let me go to the question section. Buy the dip, Isaiah Jackson. Yes, absolutely. The dips definitely present some great buying opportunities. We're going to be discussing that, not financial advice, but yes, the dips are good opportunities, especially massive crashes like this. These are times that I would definitely be looking to see about, maybe investing, adding to positions right now. So yeah, the dip, buy in red. No, I'm sorry, don't quote me on. Don't buy in red, but look for red. Look for red. Those present good opportunities. So let's talk about our oscillators. Actually, wait, we're going to talk about the oscillators. I'm going to just discuss the fear and greed index, and we're going to discuss the total market cap as well. But keep in mind, family, that we've been in extreme fear for quite some time. A month. We've definitely been in it for over a month, and it doesn't feel good, but we're going to pull out the graph here on the fear and greed index. We're at extreme fear. We're registering very low 11s, 13s, 21. Last month we were even in fear. So it makes sense because we've had a 48% decline ever since Bitcoin hit $69,000. And as you can see here, when Bitcoin was topping out, we were in the greed sentiment levels, and we're in the levels of greed during that time. And ever since the crash, you could see here that, or ever since Bitcoin topped, you could see that we've been becoming more fearful ever since. And right now we are at these low zones of the fear and greed index. So we are exactly where we were at during the summer months. That we remember that was pretty darn brutal as well. This is another brutal crash in a sense as well. But keep in mind that, these are always typically some of the best opportunities to look in, to possibly adding or investing in certain projects when we get these very, very fearful levels, this very prolonged dumpy action. These are good levels to look at, let's just say that. So another reason why we're bringing up the fear and greed index is because we always want to remember the cyclical nature of the trading psychology, or at least the investor psychology. When we become too greedy, eventually we're going to get fearful. And it's the same thing. When we become too fearful over time, the greed is going to start to build back up. Then once the greed starts to build back up, everybody's euphoric, a lot of positive price actions going on, a lot of things are skyrocketing, everybody's happy. And then we're going to get fearful again. It's just the nature. It's just a cyclical nature. So let's get back into the charts. Let's look at the oscillators. We talked about our death cross. We had some data ranges on our death crosses and golden cross. We see that typically it could take a couple months, at least for this past year, to form a different cross. It could take anywhere from 80 to 120 days or even more, but since we recently formed our death cross on January 5th, we could at least extrapolate that we're probably going to be riding a bumpy road for another couple weeks, months, maybe, before we start turning the sentiment in the market starts turning back to greed and starts to be more bullish. But as of right now, the sentiment in the market, we are in a bear trend. I wouldn't quite say that we're in a complete bear market that's going to last for 2 years. I personally don't, or a year or more. I personally don't believe that, but please do your own research. Do not follow my opinions. I would have your own, do your research, see, take a second to see where you think the market's at and it could be heading. But personally, at least on this side of Crypto Tutors, we do not think that we're going to have a year to 2 year bear market. Heavy bear trend, yes, very similar to what we've seen here during the summer months. And I'm going to pull out some oscillators real quick. As you can see here, we'll just do the daily really, really quickly that, we're very, very oversold. We're in this trough-like zone, like on our wave structure. We have collapsed on our wave. And we want to surf those waves, so we want to look for when the wave eventually comes back up and ride those tops and get out, hopefully, and try our best to get to at least take profits at the very top as close as we can. But yes, we've crashed on our wave and we're in the trough zone. So we definitely like to look at getting in positions in the troughs, selling at the peaks. Positions in the troughs, look to getting in or selling the peaks. Even if you're long-term investing, getting in the troughs is a very good, at least a very good opportunity because prices have already come down substantially or to an extent from where they have been. So oscillators, RSI, stochastic RSI, we have confluence with all of them, and I'm even going to pull out the MACD right now. There we go. So everything's in the trough zone. So we have multiple areas of confluence right now where we are very, very oversold. Really important also, I want to take a look at the weekly to see where we're at. Then we're going to briefly discuss the market cap as well. But as you can see here on the weekly, refresh that, here we go. Jeez. As you can see here on the weekly, we've produced how many red candles so far? How many candles is this? Right here. We got 9 bars, 9 weeks. 9 weeks of negative dumpy price action from the high here. So we've had nine, at least on our Heiken Ashi, we've had 9 red candles. And as you can see here, this is the same, almost the same thing that has played out during those summer months. Late spring, we've had a lot of red candles before we eventually reversed. And keep in mind that we cannot go down forever, but we can't go up forever either. Always keep that balance in mind right here. So at least this right here, we could still have some more red candles to come. That trend is very, very heavy right now, but we will get a bounce. We will get a reversal at some point. This is not going to go down forever. We will reverse and we will start producing green candles once again, but we have been on a consecutive streak of red candles on the weekly for Bitcoin. And we're going to look at like I said, the total market cap as well. But even keep in mind here, very, very, very low on our stochastic RSI. We're in the trough zone there. We have, we've already diverged on our weekly MACD right here, and we continue to dump. And keep in mind, we can also continue to, like we've been saying, continue to dump and possibly retest those lower 30,000, even $29,000 level. It would not be too surprising if we had some wicks or even a candle down here at the lower 30,000s, or even having a wick at the 28, 29,000 as a continuation of this trend. But yes, with the stochastic RSI, with the MACD, everything's in red. we've been in this slumpy position for the past 8 weeks. We're continuing to remain slumpy, and especially with the external factors affecting markets, which has been the talk. You could watch so many other traders channels and other YouTubers. They're gonna be mentioning the same thing, that the talk of the Federal Reserve raising interest rates isn't good for markets. It's drawing out a lot of negative sentiment in the market. People are panicking, and there's a lot with the economy going on as well, inflation and all that. So all these are some external factors affecting the price of Bitcoin and the overall market as well. So what did we just discuss? The weekly consecutive candles were in the trough zones on our oscillators, and even on our RSI, we just continue to move down. So down, down, down. So let's briefly talk about support one more time for Bitcoin, and then we're going to look at the overall market cap and wrap it up. So support right now is very, very interesting, kind of odd level, but you could see here, at least judging from our visible range, like we've said earlier, this mid $30,000 level, $35,000 level is is going to be the level of importance that we're trying to hold. So I'm gonna just highlight this in green here. We're just gonna bring it all the way through here. Here we go. As you can see here, at least in this zone, judging, I'm going off these visible ranges right here, but we do have some interaction at these levels. This is really, 30,000 is the last level of critical support. If any level that Bitcoin needs to hold is above $30,000. If anything, if it breaks everything else, it just needs to hold above 30,000. But as of right now, we are getting some action at these mid $30,000 levels. Not too bad to look at. Are we going to 20K? I don't personally believe so, but anything's possible. Let me go back to the questions right now by the dev. Okay. All right, so let's just talk about support levels for Bitcoin right now. Let me see. We're just gonna go on the, at least I guess hourly right now. Yeah, we are really just trying to hold this 35K level right now. But everything's just slumpy, so if we don't hold that, we're going to be revisiting these lower $30,000 levels. All right, so the total market cap, real quick, I just want to wrap this up. As we can see here, looking very similar to Bitcoin's total market cap, and the oscillators are reading the same thing. We're in the dumpy zone, we're in that trough-like wave zone on our oscillators. A very important pattern and least levels to monitor for prices, at least when you're considering getting in. Definitely look at those oscillators. But even for here, currently we're at a $1.83 trillion market cap. Right now, we're just going to take the same fib levels as well from here at the top. This last cycle, we're going to go here. And just to highlight real quick, we as a total market cap right now, we're at a $1.83 trillion market cap. Now that may seem pretty high, but in reality, for the entire crypto market cap, there's still a lot of growth that could be had in the crypto market. So just like Bitcoin, we've plunged probably about 50%. Here we hit a top, but there was that $1.3 trillion in the market. And yes, we've cut that in half to 1.8, 1.5, around this right here. So why do I bring this up? Well, because there are also certain factors that affect, well, at least certain factors I believe that are going to affect the growth of this market. And also, I would point out to the rampant amount of inflation that our government, or at least that our Federal Reserve, at least let me rephrase that, due to the frequent amounts of money printing that we've experienced in the past 2 years, I do believe that we're going to have a continuation of high money printing throughout this decade, even though the Fed is right now trying to quote unquote taper rates. They're trying to raise them right now. I do still personal opinion. I personally believe that we're going to continue to see government spend wildly throughout this decade in multi-trillion-dollar stimuluses and restructuring packages. So in a nutshell, I'm saying that we're still going to be printing, at least I believe our government is going to continue to print an astronomical amount of money. And in theory, that a lot of this newly printed money throughout the decade will at some point find its way into crypto. So currently at a $1.8 trillion market, and as you can see, ever since the COVID-19 crash, we've had positive growth up until now. We've broken that trend right here. Still trying to find that low, but we have been growing pretty exponentially in the crypto market, and we will be at a multi-trillion-dollar market cap. There will be money coming into this market throughout this decade. But as of right now, short term, things are looking pretty darn ugly. But always keep in mind the long-term perspective. Long-term crypto, due to gaming, metaverses, NFTs, big smart contract platforms, this is all technology right now. So we're going to see a lot of adoption throughout this decade and even throughout parts of this year in some different sectors of crypto. But overall, if we're adopting our long-term mindset, we should see the crypto market growing year after year. That's pretty much been the case for cryptocurrency since for the past 10 years. Wild volatility, but year after year, the market cap keeps on growing and growing year after year. And we could even see that at least on our monthly. You could see just overall growth, just exponential growth. And this growth is only going to continue the more adoption and development comes into the space, because this is the future of technology. We have Web3. This is the future of finance. This is the future of gaming. This is the future of a lot. Is going to be very digitized. So cryptocurrency naturally is going to absorb a lot of that adoption and be at the forefront of that. All right. Sister Online, it's Black Friday sale for the next 3 months. Yeah, it's gonna be there's good opportunities. PRR, there is gonna be good opportunities right now. These are very great opportunities. One thing I like to keep in mind is if you know, or if you have investable funds and whatnot, not financial advice, but if we look at our fear and greed index, I always like to keep in mind buy in fear, sell in greed. Buy in fear, sell in greed. Buy in fear, sell in greed. Not telling you when to buy, not financial advice, but I like to keep that in my mind. We buy in fear, you sell in greed. You don't want to buy in greed and sell in fear. All right. So Black Friday sale, Sister Online, buy the dip. If you just spent $1,500 on Christmas with no return, 1,500 Bitcoin should be your problem. True that. PR arc. I hope everybody's had some value from this live stream. As of just to recap right now, Bitcoin, we are still in this downtrend. And we're going to continue to be in this downtrend. We're very oversold on a lot of these time frames in general, weekly and daily. But that trend is pretty aggressive, and there is a lot of external factors affecting price as well. So Bitcoin, if we do not hold this $35,000 range, based on what we've seen the past year, we were expecting that we're going to get either a wick or some kind of flirtation around these lower $30,000 levels right here, and that seems like almost where we're heading if we don't hold. All right, family. Much peace, love, wealth, and health. I'm out. May you have a prosperous 2022. Well, we will be back next Sunday. Bye-bye.